Welcome back to another episode of the St. Louis Podcast. My name is Eric Brown. I am president at Vi Media and partner at Mogul Holdings. Today, we got some news. We've got some news, and we've got some old news as well, some stuff I came across that absolutely blew my mind because I was looking into, and as many as I'm sure you are worried about potential car obviously price increases. And really over COVID, just car prices have gone through the roof, including used. I mean, I bought which I still drive because it cost me literally nothing. And the insurance is also next to nothing. And I get like 35 miles a gallon on my old Corolla. But I bought that back in, let's call it 2019, I believe. And it had 50,000 miles on it. I got like a 4-year loan. And I was paying, like $180 a month. I think the car cost me, $9,000 used with 50,000 miles on this. And I got a good deal as well because it's manual. And, it was sitting on the lot because no one, I guess, wanted to buy a manual Corolla. And I was coming from a Saturn Ion Redline. Shout out. So I definitely downgraded. But, you got to do what you got to do when you're building a business. So bought that, and now, good luck finding any used car, under, say, $15,000, $16,000 that's going to last you more than a couple of years. And obviously we know that the average new car price, which we've talked about here on the podcast before, let's look it up, average new car price. Average new car price is $49,000, which is absolutely insane. So, okay. Average car loan cost for $50K car. Let's see. All right, so we got a $50,000 car. Let's say you put $4,000 down. Interest rate we know is not 5. Let's make that like 7. All right, let's go 5 years with that. So 7% interest rate, $4,000 down, loan term of 5 years, 60 months. Your average monthly payment for the next 5 years for a $50,000 car is $910. That's insane. And I don't agree with Dave Ramsey on, a lot of his financial philosophy. But he does say that the best way to stay middle class is when you look at a middle class household and they have 2 new expensive brand new cars in the driveway. More likely than not, they're spending a large majority of their money on those assets, such as their home and cars, of course. So auto loans are through the roof. And what this led me into was Cash for Clunkers program. Now, I don't know if this was well known or if maybe I'm just late to it, but of course, this ended all the way back in 2009. Now, of course, the Cash for Clunkers program was a government initiative offering incentives to trade in old, inefficient vehicles for new, fuel-efficient ones. It was not a scam, right, of course, but it faced criticisms for its unintended consequences and high costs. Or was it intended consequences by the lobbying of, Ford, GM, automobile manufacturers, right? So it's officially known as the Car Allowance Rebate System, $3 billion taxpayer-funded program implemented in 2019 to stimulate the economy and improve fuel efficiency. It offered consumers a subsidy, or I said it stopped around. Yeah, it did. It's ended in November 2009. Offered consumers a subsidy around $3,500 to $4,500 to trade in their older, less fuel-efficient vehicles for new, more fuel-efficient ones. Program aimed to boost new car sales and reduce pollution. To qualify, a trade-in car had to be less than 25 years old, have an EPA-related fuel efficiency of less than 18 miles per gallon, be in drivable condition, and be scrapped. Now, of course, it ended in November of 2009 because the funding was depleted. Now, here are the unintended consequences. cost and taxpayer burden. Critics argue that the program was expensive, with some estimates suggesting that taxpayers paid $24,000 per vehicle sold. So, like most government programs, this was not efficient. And of course, just another program with unintended consequences of us paying way too much money, but also us as a consumer getting screwed over, which I'll get to here in a second. The program led to a shortage of used vehicles, which drove up prices for those cars, especially for lower income consumers who relied on them. Some studies suggested that the program primarily pulled forward new car sales that would have occurred anyway, rather than creating new demand. Yeah, because you're getting rid of all of the used cars, now you're forced to buy a new car. Regressive nature. The program was criticizing for benefiting those who could afford new vehicles rather than those who needed them most. So it's affecting most of us, right? Destroyed existing resources. The program destroyed existing resources by requiring the destruction of used vehicles. So just those vehicle parts that could have been used. The program redirected resources to manufacturing sectors out of touch with consumer demand. The program made it difficult for cash-strapped drivers to access transportation. Critics also claim that the program favored foreign manufacturers. So if you didn't know this, you were like me up until recently. So cash for clunkers destroyed around 680,000 vehicles. In 2020 and 2021, new vehicle sales dropped by about 4.5 million combined, so about 5 times the effect on used car supply cash for clunkers had. Interesting. So, taxpayers spent a bunch of money, and in turn, we got a lot less used cars, less used car parts, and you were essentially forced to buy new vehicles. So who did this help? Sounds like the only people that helped is automobile manufacturers. And of course, this was a government program incentivized and pushed as a way to help us, the people, right? Americans. Should we get into Trump manipulating the stock market? Now, I did buy the dip. I did. I bought a bunch of VU. I bought a bunch of VTI. Bought a bunch of VXUS, international stock market. But I was only doing it because it was going down. And I've had some money just sitting on the side in a high yield savings account that's now, I mean, a year ago it was making 5% at SoFi. Now it's only making like 3.8%. So I'm like, well, got to move some of this around. Might as well put some in the stock market and continue my investment portfolio for the time I retire. I'm sure it'll be semi-retire. But let's talk about it. So obviously, I think we talked about tariffs briefly last week, and I was like, let's see how it plays out. Well, it sort of played out. So obviously, tariff news was released last week, right? Very end of last week or whenever it was. Stock market's been going down. It took a huge dive. What was it, Monday or Tuesday? I think it was Monday. No, was it last Friday? Because we were expecting it to go down on Monday, and it didn't go down on Monday. It was supposed to be red. Anyways. So stock market was down, right? We were, I think, 20% down on Dow Jones. And then, of course, everyone, the consensus was it's going to go lower, right? It's going to go lower because yields were continuing to increase. So, people worried about, China selling treasuries, selling bonds. So all of the news for Monday was, hey, we're going to have like a red Monday. And of course, that did not happen. Instead, we had it skyrocket. It went back up. It was like the best day ever. But it went back, it didn't even go back to where it was just a couple of months ago. And of course, my big issue with this is I see a video circulate, and you guys can feel free. Maybe I'll just send the link and we can just throw it in here. We see a video of Trump and some people in the Oval Office, and he's talking about how this guy made $2.5 billion, this other guy made $900 million, on the day that the stock market increased. So my thought immediately was, okay, we already know, and I already attacked Trump for this, the bullshit about, the meme coin, the Trump coin. Now they're talking about creating what is it called? Like Tether, right? Where you have essentially it's tied to the dollar. And of course, just watch anything or read anything about Tether. They're full of shit, and a lot of their money isn't backed by anything. And then of course, we had the meme coin, right? Trump, it's skyrocketed. I'm sure a bunch of people internally on the inside team made a bunch of money, but of course, all of the people that bought it then lost a bunch of money. Screw them, I guess. And of course, this happened again. I mean, this is investment strategy 101. I'm not a financial advisor and I don't know what I'm talking about. But if you're investing long term in 401k and, the S&P, okay, the stock market goes down 20%. It's a huge hit. But really what it did was it essentially went back to the point it was just 1 year ago. So we essentially lost all of the returns over a year. And really, the stock market has been increasing substantially since, 2020. So I've always looked at, you look at the 5-year, but then you look at the 15 or 20 year. I don't know why it's increased so much over the past 4 or 5 years compared to, the 15 or 20 years previous. But of course, you don't want to sell, right, when it's low. I mean, look at 08. You should not need that money until after retirement. At that point, then you shouldn't have just all of your money sitting in the stock market for volatility reasons, right? You have other things that you can invest in, treasury yields, bonds, gold, things like that. And so let's get into it. So my big thing is this feels like insider trading, absolute corruption, whatever you want to call it. And again, I'll make sure that video gets in here. So, of course, Trump, president, wrote on Wednesday, a mere 4 hours before announcing a 90-day pause on most retaliatory tariffs except for China. And he said on True Social, this is a great time to buy, DJT. Now, of course, insider trading is a legal practice that involves using special or private information to give yourself an advantage in buying and selling stocks. Someone with knowledge of an economic policy change that would cause the market to shoot back up would be posting about how a great time it is to buy right now about the policy before the policy change happened. This is a particular situation that looks like the opposite of a pump and dump, a poop and scoop, where an exclusive group of people with private knowledge do whatever they can to drive stock prices down, like announcing debilitating global tariffs, and then buy stocks up strategically before the price goes up, or buy spy calls, which was absolutely through the roof. And we saw, 1,200% returns, 2,000% returns. So think about if you put, $100,000 in, the return is ridiculous. So Trump is creating giant market fluctuations with his on-again, off-again tariffs, which most economic policies and people right now are saying that this is not the best way to go about tariffs because the stock market's all over the place and companies don't know what you're doing. Business owners don't know what you're doing. And apparently this is all the art of the deal, right? I don't know if Trump is playing 4D chess here. If you watch what he said afterwards, it's like, yeah, he did the pause because people were getting yippy and yappy. That doesn't seem like that's the art of the deal. These constant gyrations in policy provide dangerous opportunities for insider trading. Who in the administration knew about Trump's latest tariff flip-flop ahead of time? Did anyone buy or sell stocks and profit at the public's expense? Like I said, look at the video and listen to the video. You'll see it right there. Trump's True Social now basically promotes veiled insider trading on upcoming announcements. You already know, after this happened, I download True Social. I have a notification when Trump talks about anything stock related. Why? Because if he's going to tell you hours ahead of time to buy now before the stock market goes up before his public announcement, I mean, he almost did this to kind of say, hey, this wasn't insider trading. I let everyone know. So Trump's benefactors are gleefully watching, of course. And so this pisses me off because, of course, 99.9% of us, and I would assume pretty much everyone listening to this podcast right now, unless you're some massive hedge fund manager or on Trump's team or have insider knowledge like Bloomberg did that put out a report on Monday saying that there was going to be a 90-day pause. And then, of course, the Trump campaign said, no, that's fake news. Well, doesn't look like it was fake news after all. So I'm slowly getting to the point of believing, and of course I was on this podcast, right? I thought, Trump was going to be better than Kamala, going to, be a change. Who knows if that's right or wrong at this point, but we know that there's absolute corruption before, and it doesn't seem like it's stopping now. It really doesn't. Doesn't seem like anything's changed. It just seems like the, tech bros are getting more money. The people with insider knowledge of these economic policies are making a ton of money. And of course, we're, as the normal people, and even the average person, doesn't even have a lot in the stock market to begin with. I don't know. It's disheartening. Sad to see.
Hey there, St. Louis podcast listeners. We've got some exciting news from our friends over at Farmers Insurance of St. Louis, led by the man, the myth, the legend, Mark Lee of Farmers Insurance.
Mm-hmm.
If you're looking for a job or to own your own business under a brand that everyone and their cousin is familiar with, Mark Lee with Farmers Insurance of St. Louis is recruiting insurance agency owners here in St. Louis for their Farmers Insurance Mentorship Program.
And as many of you are aware, Garrett and I have owned quite a few successful and award-winning businesses over the years. And in a past life, one of those was a farmer's insurance agency out of Chesterfield, Missouri.
Eric and I know firsthand how hard it is to start a business under a brand that no one has heard of and convince consumers and businesses to trust that you're an authority figure in your industry.
And as many of you know, we own an award-winning marketing firm, Vi Media, the one that Garrett was just discussing. And building that company's reputation literally took years. We're still building it to this day, and it's been 8 years in the making. However, with the Trusted Farmers Insurance Agency name on the building, we got started when we started our Farmers Insurance Agency. The trust was already built and has been for 96 years.
And if you can't do math, that means Farmers Insurance has been around since 1928. Luckily, you don't need to be a human calculator to get rich as an owner of your very own Farmers Insurance Agency.
Nope. All you have to do is reach out to the one and only Mark Lee, the leader of Farmers Insurance in the greater St. Louis metropolitan area.
That's right. So ensure he continues to sponsor our show and your favorite podcast, the St. Louis Podcast, by quitting your job today and calling Mark Lee. I wouldn't even wait for him to answer your call. Call your boss now, quit, and become your very own business owner.
Mm-hmm. Visit insurancecareerstl.com. That is insurancecareerstl.com. Should we spell it out?
Yes. It would
INSURANCE. Career, CAREER, STL.com. Insurancecareerstl.com. Go there now. Back to the podcast.
And wait. Insurancecareerstl.com.
Back to the podcast. Now, what I will say, and what I've noticed, is that Bitcoin, that everyone says is the hedge. Bitcoin's the hedge. Bitcoin is just another tech stock, not a market hedge, study shows. Bitcoin is frequently viewed as digital gold and a hedge against risks facing the traditional financial sector. Bitcoin is more closely related to the NASDAQ than it is to gold most of the time, and investors could benefit from viewing it as yet another big tech stock. Bitcoin's correlation with the NASDAQ is currently at about 0.5 after it approached 0.8 earlier this year. Meanwhile, its correlation with gold has been falling since January, touching 0 at one point and is now just above 0.2. Bitcoin trading is highly correlated to the NASDAQ over short-term horizons. The NASDAQ correlation leads to the idea that Bitcoin could be included in a basket of large tech stocks. If it were included, the implication would be more institutional buying, as BTC would serve multiple purposes in investor portfolios. Bitcoin is frequently viewed as digital gold and a hedge against risks facing the traditional financial sector. Kendrick said he still sees the flagship cryptocurrency serving that the purpose, but that in reality, the need for such hedges is very infrequent. Well, I would disagree with that. If you look at, again, the stock market over the last week, if you see how the massive dip, right, that the Dow Jones, SPY, everything else took, it is Bitcoin directly follows that. Okay. So if the stock market goes down, Bitcoin is going down. Stock market goes up, Bitcoin goes up. Now, it's not 100% of the time, but it's pretty damn accurate. So everyone saying that this is a hedge isn't exactly correct, because think about it like this, when it comes down to money and when it comes down to assets, what is the first thing that people are going to sell when they come into a situation of needing money? It's not going to be their house. It's not going to be their 401k or their IRA or their investments in the stock market. It's going to be their cryptocurrency. It's going to be Bitcoin. So those things are going to be affected first, right? And the reason being is, what are you going to do with it? Hold on to it? Sure, you could do that, but I mean, Bitcoin's been proven to be more volatile and risky than the stock market. And I think for the most part, and again, I could be wrong. I'm not a financial expert, and a lot of the time I don't know what I'm talking about. This is for entertainment purposes, right? But we see Bitcoin. I think a lot of us miss the Bitcoin train, sadly. I mean, buying now, 75, what's it at? 80,000, I think it's back up. Let's see, Bitcoin price, 82,000 right now. The day it started, let's look if it's following the stock market. Okay, yeah, I mean, just open, so not much news there, but it's not going down. SPY's up 0.22. So just look at that. Go ahead and pull up if you're a big Bitcoin person or not, and tell me if I'm wrong in the comments, and I might be. But look at Bitcoin charts in association with SPY or Dow Jones or S&P, whatever you want to look at. They go hand in hand. Now, of course, what is a better hedge is gold, right? Obviously. And what's interesting is I found out, you think I would know these things. I found out that there's a gold ETF, and there's quite a few of them, that kind of follows gold pricing. Because, of course, holding on to gold is annoying. Then you got to go sell it, and when you want to go ahead and sell it, and then, of course, you lose money there. So maybe there is something to be said for buying gold ETFs, right? So maybe there is, but look at gold in comparison, right? So that's a better hedge, and even silver is doing fairly well right now as well. And of course, my favorite stock that I have not talked about in a long time, but I'm still holding on to in the hopes that maybe something happened. It's my gambling money, and that is GameStop. Go ahead and look at GameStop chart. For the last month. And you will see it to not follow the trend of the entirety, essentially, of the rest of the stock market. Why is that the case? Well, I think there's a lot of people like me holding the stock. Which is interesting. Very interesting that GameStop did not follow the rest of it, essentially the entirety of the stock market. Is GameStop a hedge? No, it's more like just degenerate gambling at this point. But what are you going to do? I'm young still. Kara Spencer wins St. Louis mayor race, ousting Jones in bitter rematch. St. Louis will have its third new mayor in 12 years. Kara Spencer, currently 8th Ward Alderman, beat Mayor Tashara Jones on Tuesday, 64% to 36% in final unofficial results. I guess I still need to official them. Turnout was 26% of registered voters. That's crazy. 1 in 4 showed up. It's pretty damn low. It's pretty sad. The campaign was built on a simple idea that St. Louis can do better, Spencer told a jubilant crowd gathered at the Grand Hall in Union Station. Some yelled back, "Yes, we can." But this campaign was about so much more than potholes and trash. It was built on the idea that we can build a downtown that we can all be proud of while making neighborhoods south and north safer and more prosperous. Let's see what she does in 4 years. Let's see. Are you going to fix St. Louis City? Are you going to have more people not be scared to go down there, want to go back to the city? Is anything going to change? Jones told the supporters who watched at the outcome at the Omega Center on city's northern edge that she was proud of what she was able to accomplish in her 4 years in office. Our city has never had a black mayor serve more than one term, Jones said. And I know many of you like me. We're looking to make history with me for the second time, but together we've accomplished so much. Spencer took a moment during her speech to thank Jones for his service to the city, which included time as a state representative and city treasurer. While we disagreed on many things over the campaign trail, I know that we share a deep love and commitment to our city. Tuesday's outcome was foreshadowed by Spencer garnering more than double Jones' vote total in a 4-way primary in March. Now, hundreds of Kara Spencer supporters packed into Union Station Grand Hall on Tuesday night. I'm looking at photos of that, and I will just say, looks like a lot of St. Louis County people are at this celebration. I'll just put it that way. Take it for what you will, whatever you want to think about that comment. So we got that. She's in. I think that's the third female mayor that we've had. So we'll have female mayors for 12 years. It's exciting times. I found this interesting. Pentagon to terminate $5.1 billion in IT contracts with Accenture, Deloitte, and others. Now, I'm assuming that a lot of this money is going to go to Palantir. If I'm taking a guess, am I telling you to buy the stock? No, I'm not. But Peter Thiel's boys with Elon. So, let's see what happens. Should you buy the stock? I don't know. With how much the volatility and how much everything's swinging, I really feel like the stock market's essentially turning into gambling instead of a long-term strategy to have money when you retire, which was, kind of the point for most of Americans, right? Drinking out of this lid in this coffee is annoying. So, yeah. That's what we got. A lot of news. A lot of stuff going on. Oh, did you see the Hudson helicopter crash? My God. There's a couple different videos, but you just see it essentially tear itself apart and just fall into the river. Absolutely crazy. This is why I said I'll never get on a helicopter. I'm good. I'm good on that. Unlike a plane that wants to fly, helicopters don't want to fly. You're essentially submitting the air in order to have a helicopter fly versus literally planes that, like I said, want to fly. You have to fight it to essentially not fly. Maryland Heights Police, where our office is and we're hopefully moving from, shot someone yesterday, so that's nice. Maybe that was even today, this morning. I think it was yesterday. That's what we got for today. That's what we got. Quick episode. We got some good guests coming up next couple of weeks, so stay tuned for that. Got a new suit coming in. Excited for that. And as always, like, review, subscribe, leave a comment, support us. Let us know how we're doing. Let us know what we can do. If you want to see some people on, let us know. If you hate us, let us know. I should say me. Please support Half Coast Studios here in St. Louis, where we're recording this at. If you need a podcast recording studio, they can take care of you. If you just need help with editing and distribution, if you need clips, all of that stuff, they can handle you here at Half Coast Studios. It's halfcoaststudios.com. And of course, because we own a marketing company, if you just type in Podcast Studio St. Louis on Google, Half Coast Studios will be the first one to show up. That's right. Organic rankings, baby. We love some SEO. So show them some love, halfcoaststudios.com. They do a great job. And of course, as always, the best damn marketing company on the planet, Vi Media, located in Maryland Heights, soon to maybe leave and be moving to Brentwood, which will be exciting if we can make that building happen. Yeah, if you need help with marketing, reach out to us at vi.media. You can always message all of the channels here on the podcast where you're watching it. You can, of course, just message myself, Eric Kempf Brown, across all platforms. And as always, this was another podcast episode. We'll be back next week with another one. We appreciate everyone's support. We'll see you soon. Thank you. Bye-bye.
Hey there, St. Louis podcast listeners. We've got some exciting news from our friends over at Farmers Insurance of St. Louis, led by the man, the myth, the legend, Mark Lee of Farmers Insurance.
Mm-hmm.
If you're looking for a job or to own your own business under a brand that everyone and their cousin is familiar with, Mark Lee with Farmers Insurance of St. Louis is recruiting insurance agency owners here in St. Louis for their Farmers Insurance Mentorship Program.
And as many of you are aware, Garrett and I have owned quite a few successful and award-winning businesses over the years. And in a past life, one of those was a farmers insurance agency out of Chesterfield, Missouri.
Eric and I know firsthand how hard it is to start a business under a brand that no one has heard of and convince consumers and businesses to trust that you're an authority figure in your industry.
And as many of you know, we own an award-winning marketing firm, Vi Media, the one that Garrett was just discussing. And building that company's reputation literally took years. We're still building it to this day, and it's been 8 years in the making. However, with the Trusted Farmers Insurance Agency name on the building, we got started when we started our Farmers Insurance Agency. The trust was already built and has been for 96 years.
And if you can't do math, that means Farmers Insurance has been around since 1928. Luckily, you don't need to be a human calculator to get rich as an owner of your very own Farmers Insurance Agency.
Nope. All you have to do is reach out to the one and only Mark Lee, the leader of Farmers Insurance in the greater St. Louis metropolitan area.
That's right. So ensure he continues to sponsor our show and your favorite podcast, the St. Louis Podcast, by quitting your job today and calling Mark Lee. I wouldn't even wait for him to answer your call. Call your boss now, quit, and become your very own business owner.
Mm-hmm. Visit insurancecareerstl.com. That is insurancecareerstl.com. Should we spell it out?
Yes, it would.
INSURANCE career CAREER STL.com. Insurancecareerstl.com. Go there now. Back to the podcast.
And wait, insurancecareerstl.com.
Back to the podcast.